Hey, what's up everybody? It's your boy Drew, and I've got another good one for you today. So here recently I've been doing videos revolving around the news in the market and why the market is moving the way that it's been moving. I feel that these have been very important, but today I wanted to get into 3 stocks to check out. So I am not invested in 2 of them. I am invested in 1, and I'm about to invest in the other 2. And so while I'm going down this journey of how I pick and choose stocks, I figure I'd bring you guys along. So with that being said, let's jump right in. So the first stock today and my number 1 pick for my next investment is Walt Disney. The reason why I'm looking so highly into Walt Disney is because COVID and fears of COVID are waning quickly, and I'm quite excited about that. As well, their theme parks are starting to open back up, and the movies. The number 1 thing that Disney has going for it right now are their billion-dollar movies. And we saw, even with not necessarily lockdowns in place, but with mask mandates still happening and things like that, we saw that with Spider-Man, that movies can still hit $1 billion. They can still beat out pretty much anything. And I mean, what? It cost about $100 million to make the movie, and they profit 9 times on top of that. That's a lot of profits right there. So the first thing I do when I look into a stock is I can go into analytics, but I'm not going to do that today. I'm going to go from how I started investing. And the first thing that I like to do is Dr. Google. I think Dr. Google is great for about everything aside from telling you that your cough is cancer, that it's not good for. But I like to look at the chart. So I like to go 5 years out. Let's see. Okay, so 5 years, it's up 29%. That's good. It's a steady climber. There are some points where if you buy the dip and you buy low right here, like let's just say 2020 March, obviously it was $89, and when it peaked out, it was up 105%, which you would have gained on top of that, which is great. I like to stay in for the long term, so I'll buy this dip. Generally, once I buy the stock, I'll end up buying this dip. I'll buy it all the way down, and then I'll ride it all the way up. Nonetheless, my prior investment as well would have made me, what, 33%, then another 105%, and so on and so forth, and I'll continue to do that throughout. So that's the first thing I like to look at. And over the lifespan, I mean, obviously Disney has gone up. This stock's been on the market for quite a while. The next thing I like to do is it's very simple. I just type in the stock that I'm looking at, Disney stock forecast. You can use tip ranks. I preferably don't feel like paying just to know exactly what analyst foresee this. But CNN has a really good one, and you just click it right here. And it's very simple. It's not going to tell you what the analyst or what specific analyst is recommending what, but it's just giving you a consensus right here. So you can see that basically all throughout January, it was a buy. So you read this chart right here. The black are the holds, and you have 10 of those. Outperform, which means that they still feel like it's outperforming the market. You have 1 and a buy consensus. So we come down to February, it looks like a 19 buy, 1 outperform, and 10 hold. And the reason why you have those holds right now is pretty much what my other videos have been about. What's going on in the economic structure right now with the war in Russia, inflation, and everything like that. But you can look over here. Now, these are not exact, so don't go in here thinking that, oh my gosh, I'm going to go up 35% and it's going to go straight up just as this line perceives. That is not the case. Within the next 12 months, this is where they foresee it. And if anything else happens, this price target will be adjusted. But let's just say it does go as it goes. The mean or the median where they believe that the in-between is about 191 for an uptick of 35%. As well, the high would be 62% at 229, and that's really good. I mean, that's 62% in a year. You can't beat that. But so I go through here, and I go through their last quarters, and I see where their earnings were, and I see where they're projecting them to be. As well, their sales, where their sales are at, because that's a big one in this climate right now, is are they going to be able to maintain the growth? And in this case, this entity has been shut down due to COVID and everything like that. And so they are a market that I could see potentially going up. So then let's go back If you want to check out tip ranks, they won't tell you the top analysts, but you can click here as well, and you can see if the two are talking to each other, basically. Okay, perfect. So we've pulled it up, and you can see they're roughly the same. Their average is 193, and the high is 229. Now, obviously, all of this, you have to keep in the back of your mind what's going on. Is the Fed going to raise rates? If you believe they're going to rug pull us at a 50 basis points, do not buy right now. Do not buy. If you believe that they're going with the 25 basis points, go on ahead. Take a chance. I mean, the market still might drop, but, you know, generally the way that I do it is I might buy once or twice on the dip during the week. I'm not going to buy every day. I do not say go in every single day. Be patient. Let it drop. Let it drop by a certain percentage and then buy back into it, so on and so forth. Okay, perfect. So we've seen Disney. It looks like it has a fairly good upside. Overall, when we go back here, when we go back up here, I mean, you can see for the past 5 years, it's been on an upward trend. Now it's obviously dropping back down just like it did here, but 9 times out of 10, it looks like Disney's going, in this case, to the moon. So we've checked out Disney. I've given you insights into how I went into it. The other thing that I do, which I'm not going to do right now, but I look up basically Disney stock, is it a buy? Boom. And I hit caps lock. And you can go, and I like the Motley Fool, I like investors, and let's see, is there anyone else that I go to? CNN Money. Okay, and then I just go through and I read. Now also, when you're going into a stock, personally I know Disney. I feel like most people know Disney. But if you're unsure of what the company is, make sure you understand what they are and what exactly they do. Don't just jump into a stock because you're like, oh my gosh, this looks really, really good. Or because someone on YouTube goes, buy this up, buy the dip, let's go. Know what the stock is. I mean, there's been a multitude of stocks where I went through last week and I was looking up some, what were they? They were mining companies, and, you know, they were mining in lithium and stuff like that. I know what lithium is. I know it goes in batteries, but what exactly is the mining of lithium? I didn't know you could actually mine lithium. And so I went through, and I mean, I literally spent about an hour and a half learning what lithium mining is. Make sure you do that, and make sure you believe in the company. If you don't believe in the company, do not invest in it. That is my number one advice. If you don't believe in it or you have no clue what exactly they're doing, stay clear of it. Stay clear. My number one investing advice, buy in what you know. If you don't know it, leave it alone. All right, so let's go on to number 2, Apple. Obviously, this is one of my buy and holds for life. But does Apple have an upside this year for me to say buy more of it? So in the past day, obviously it's gone down. In the past 5 days, it's technically up, which is really, really good. Over the month, though, it has taken a hit, just like everything else has. 6 months, 5 years, obviously this thing's going to be on top if it will load for me. Let's go to its peak. It's up 144% in 5 years. So as you can see, I mean, this stock has outperformed itself over and over, time and time again, year in and year out through every single dip. But what are the analysts saying? Let's check out here real quick. Apple stock forecast. Bam. Okay, so first thing that pops up is money.cnn.com, where I like to go. And perfect. All right, so out of 37 analysts, 12-month price forecast for Apple has a median target of 192 with a high estimate of 215 and a low of 154, which would actually be about $7 down from where it's at right now. And as I'm going to state over and over again, obviously we've got to watch what's going on with the war in Russia, the Fed, everything like that. But if things go as planned, in the next 12 months, you would see a 17% for the median, which still isn't that bad. I wouldn't say that it's one to jump right into that's going to give you those gains that are going to set you up. It's not one that I would just jump into right now and say, oh my gosh, I'm going to make a ton off of this. But just like Disney, steady gainer. But the high right here, if by some chance we can get it to hit the high, it would be an uptick of 31.7%. As well, we can see over here that 27 analysts are saying buy. 6 think it's outperforming the market, and 9 state a hold. And this has stayed true through November, January with everything that's been going on, and February right now. But yeah, going through and checking that out. All right, perfect. So now let's see. Oh, and here's another cool thing that I wanted to bring up, and the reason why I like CNN so much. You can go click right here. They have all these these headings right here, and you can see the financials. For 5-year financial summary, you can see 100 billion all the way up to 200 billion 2018 for total revenue, cash and short-term investments, cash from operations. You can get over here revenue and income. So net revenue was 231 billion. As well in 2018 it was 265 billion with a 4-year trend right here. Cost of goods sold, depreciation. As well, you can go through the operating expenses, the taxes, and the EPS as well, the earnings per share as well. And you can go through that, which is really, really cool. You can check out the charts, which, just gives you a chart of the Google chart right there. Any news that you'd want. Let's check out shareholders right here. So Tim Cook, he sold. Oh, wow, that's kind of crazy. So you can see the shares that he traded and things like that. So, okay, so the insider trading, that's really, really cool. And it dot plots the points and which they sold, which is really, really cool. Okay, so you see some selling, no large purchases. And then another cool thing, it's competitors. So the reason why I like this so much is because it opens your eyes to things that you wouldn't have necessarily looked at. So in this case, Motorola, Nokia, and Qualcomm as well. And this is something that I like Fidelity. As y'all know, if you watch my first video, I use Fidelity for my large account. And these are things that Fidelity shows me as well. It shows me its competitors, which is really, really good. I've been able to go through and find companies that I wouldn't have necessarily looked at before. Okay, so going back. So for me, does that look like something that I would invest into? With the potential of a 31% increase, yes, that is something that I would definitely look into. Even if it doesn't hit it in the 12-month span, if that happens within a 2-year span, that's good on money. I mean, everybody thinks that you just go from 0 to 100% to 4xing your money. That is so rare in the stock market. That's why the stock market is a long-term financial goal. It is not for the immediate or short term. But the way that you get there is slow and steady wins the race. You're looking for when you want to retire. That's when you want your money set up. And in this case, getting a 31% uptick and potential of a year or 2 years, that's a good buy in my opinion if it does come to fruition. All right, so continuing on, the next stock that I wanted to check out was Nvidia, if I can spell today. And Nvidia. So there's something cool with Nvidia that I personally did not know before, and this is why I always state, do your research. Look it up. So I have a PC, obviously. That's how I am recording all this. That's how I do streams, things like that. Well, what goes into your PC? A GPU for those who like to game like me. And what's the #1 brand out there? Well, Nvidia. AMD has the chips or the CPUs. Nvidia has the GPUs. And they're killing that market. But is that, for me, enough to invest into a stock? Yes, computer sales are going up. You have esports and things like that. But not necessarily for me, because it doesn't really offer, to me, mass profitability off of just one aspect. But this is what I learned that was really, really, really cool about Nvidia. We'll get to it in just a second. So let's check out the 5-year. 5-year, it's to the moon. If you go up to its highest peak, it's up 305%, which means if you had bought all the way back in 2017, you would have 3x your money. You cannot ask for any better than that. I mean, that is a 5 years, 300%. I mean, if you had put $10,000 in there, you'd be $30,000 in 5 years. You can't beat that. Going down, CNN Money, let's see what the analysts are saying. All right, so seeing what the analysts think, you have 30 analysts that say it's a buy, 6 outperform the market, and 8 on a hold, and 1 sell. 1 measly, lonely sale. And I guess I could see that with the tip and the potential for inflation and things like that. But computer sales aren't going to go away. People building PCs aren't going to go away. Esports, streaming, things like that. It's too big and it's too much of a money maker for it to go away right now. But if they hit their median it is basically a 50% gain, and if they hit their highs, it's a 74% gain, which is really, really good. As well, a lot of the analysts are going for it. Going back to what I was stating, what I'm looking for, analysts are preaching this. You know, these guys wouldn't have jobs if they didn't know what they were doing, and they are screaming this as a buy right now. And now let's go to that other bit of information that I told you about. And of course, I can't spell, but here's exactly what it was. So I was just going through and I was just doing research on the company, and you really have to go through a ton of articles and a ton of the business websites to see exactly what they're doing. But here is what I thought was really, really cool. So like I said, if Nvidia just did GPUs, it would not be a buy for me right now. So this is what I thought was really, really cool about Nvidia. If you look over here, they are working on self-driving, autonomous driving cars. And they are working on what's actually going to do it. And I thought that that was really, really, really cool. So anybody who knows Tesla knows that that's the next step for Tesla, is they're going with their autonomous driving. Well, how are they going to get there? Who's going to provide them with all of this? And you look right here, Nvidia Drive end-to-end platform for software-defined AVs. Autonomous vehicles are transforming the way we live, work, play, create safer and more efficient roads. These revolutionary benefits require massive computational power, horsepower. Oh my gosh, I cannot read today. And long-scale production software experts, tapping into decades-long experience of high-performance computing, imaging, and AI. And Nvidia has built software-defined end-to-end platform for transportation industry that enables continuous improvement and development through over-the-air updates. And that is cool. So that is something that I saw that just screamed in my head, get in on this. So obviously no one has a fully autonomous vehicle yet, but they're getting there, and they're slowly but surely going to get there. And when they get there, who's going to be a leader in that? Well, Nvidia already owns the computing space and everything like that. Why couldn't they make it here? And that's what's going through my head right now. That's a scream for me. And I want to get in while it's early. It's not there yet, and it's not technically at its earliest state. But with the dip that's been provided right now and what could be coming in the next 5-10 years, I want to be on that right. I want to ride that wave. And it might be a slow and steady wave, but it's a wave that I want to ride, because if Nvidia hits this nail on the head, it's literally to the moon. And so I know it might not be new for everybody, but this was really, really cool to me. And this is exactly why I want to invest in Nvidia. They're so much more than just GPU. I mean, they have the technology space, the computing space, like it's no one's business. I mean, just look at this chip right here. It's Drive Atlian. I mean, just think if they paired up with Tesla. I mean, I'm pretty sure Tesla's working on their own, but who knows? Maybe they're working with Nvidia. Maybe that's my next lookup. But yeah, that's what I thought was really, really, really cool. And so if we go back here and you look at their 5-year, and then you add autonomous driving into it, how much more profitable could this business be? I mean, it's crazy to think how much more. I mean, you look right down here, revenue in 2020 was 10 or basically 11 billion. And just imagine if they're selling this stuff to Ford, GM, Volkswagen, any car company, and they're just selling it and integrating it into their cars. I mean, that is a ton and a ton of money that this company can make, and who knows what else they could venture into. But that was fun. All right, perfect. So as I stated, those were my top 3 picks for you to check out as a potential buy. I am not a financial advisor. I am not telling you what to buy. I am only giving you what I'm personally looking into and what I'm thinking about. And even though this was an oversimplified view, this was exactly what I did in the beginning. I looked for the profitability. When I started really getting heavy into stocks, it was right before the crash, and I was scared and I was worried, but I looked at it at a chart, and I zoomed out and I looked at it and I said, okay, these things are falling off of highs because they're fearing that no one's going to buy it right now. But then when people start buying it again, it's going to go right back up. And the same thing's happening right now. You're having a dip. These companies aren't changing. If you believe in it, then it should go back up. And all that the dip is right now is a buying opportunity for greater returns than if you wait till it's going green again. All right, everyone. Thank you again for checking out the channel. Make sure you smash that like button. Like I said before, smash it so hard you break something. Make sure you subscribe so you don't miss out on anything else that I have coming. As well, I hope I opened your eyes to maybe some potential buys in the future. Who knows? But with that being said, let's get out there, let's make some money, and I'll see you next time. Peace.